today's webinar. Thank you so much for being here and joining us. Today's webinar is all about living a balanced life with multifamily. So, think about your own particular goals, whether you want to be in multifamily, single family, any sort of real estate or alternative investments to generate cash flow to support your lifestyle. Today, it's really about living that balanced life with multifamily. So as a multifamily investor, I'm going to kind of use multifamily, but if you have a different strategy, just substitute when I say multifamily for what that is. However, I will preface that in real estate, I have pretty much done every type of real estate investment out there. And from a ROT, return on time perspective, multifamily has been the most rewarding and the greatest return on time compared to other investments. Now, I'm not saying multifamily is the end all be all and everyone must do it, but what I am saying is for my own personal investing career, I have found multifamily to be one of the best asset classes to invest in to have a balanced life. So a lot of us that are out there interested in real estate, specifically multifamily, maybe we come from corporate America, or maybe we're just trying to build cash flow to be full-time entrepreneurs and not have to punch the 9 to 5 or the daily corporate grind like other people do, or we're trying to get out of it. Multifamily is a great way to do it, and it's all about living that balanced lifestyle. So in today's webinar, I'm going to keep it on the shorter side this week. And then I do want to go into any questions that people have, as I feel like there's so many unique scenarios that need to be addressed. So feel free to use the Q&A box or the chat box, preferably the Q&A box so I stay organized. But go ahead and ask those questions in there specifically to your scenario. If we can help, we certainly will, or we'll try to direct you somewhere else. So Chris, good question. The call will be recorded and it will be posted on the Facebook group. So make sure you check that out afterwards if you need to drop off early. So in today's webinar, I'm going to talk about why multifamily is powerful and it helps you live that balanced lifestyle. We're going to also talk about how to work when you don't have to. Very important topic that a lot of people may struggle with. And lastly, we'll kind of get into a 4-bucket exercise to prioritize your daily activities. These are very common exercises that I have learned through reading books about productivity or optimization. So it's something you've probably already heard, but I'll put it into my own words and hopefully it will resonate with you a little bit. So getting into the first topic, why multifamily is powerful with its scale. So as you think about multifamily, and in my experience, why I love it so much is because you have a collection of units or residents in one specific location that you can have all the time and attention overseeing that one particular location, as opposed to having 100 single family properties with 100 different residences, 100 different driveways to go to, 100 different power bills to collect and oversee, or 100 different roofs to take care of, things like that. There's size and scale to multifamily, and that's one of the best asset classes, again, to live that balanced lifestyle. So when I first got started, I was thinking about building cash flow that was generated on a monthly basis to support our cost of living and our lifestyle. And when I thought about having to buy 10 or 100 single family houses or 10 or 20 different retail mixed use type of properties to get cash flow equal to a 100-unit apartment complex, it just didn't compute with me. And so I certainly tried it out. I have done single family properties. I've done foreclosures. I've done flips. I've done short-term vacation rental properties. We have smaller 4-unit properties. I have commercial office buildings. I have a kind of like a Regus office executive suite rental business as well. And all of those things that I just mentioned take a lot of time to oversee. There's a lot of nuances that go into it. And the most important thing is to have a business that's built around overseeing and managing your assets to ensure that you have steady cash flow coming in. And so that's exactly what we did with passiveinvesting.com. We built a business around it. So it's not me personally doing every single job every single day. It's about having that scale to support and pay for team members. And it's really hard to get there with a collection of single family houses, a collection of mobile home parks, a collection of office suites or retail centers. You have to have a lot of them. And when I looked at multifamily, I knew that we could buy a fewer properties, but have higher monthly income collections, which in return gives you higher cash flow. So all of those things really make multifamily very powerful. And then when you're able to compound and buy a few hundred units at a time, now we're getting into that scalability where you have full-time on-site management that manages the day-to-day. And then you as the owner oversee and do the asset management. And then once you have maybe 1,000 or 2,000 units, you then have the ability to hire a full-time asset manager to oversee that business. And so when we first got started with passiveinvesting.com, the partners and I, Brandon, Dan, and myself all said, hey, we want to build this company large enough to support full-time team members to work with us. That way, we're not doing all of the duties. Because when we first got started, we were doing everything just between the three of us. And then we knew that that lifestyle was not sustainable. So I'll take that back to being in corporate America. That lifestyle was not sustainable. A lot of you out there may be feeling that same frustration of having to punch the time clock or be on calls when you don't want to be, or having to put presentations together that you're not passionate about, and doing these tasks and activities where you're exchanging your time for a paycheck. It's not as rewarding. And multifamily was the vision and the avenue, the asset class for us to utilize to meet our goals, our vision, our business, and our scalability for where we wanted to go and where we see ourselves going into the future. And so part of that balanced lifestyle, it's really hard work from the get-go, right? You may be working a full-time job, also in your spare time, underwriting deals, talking to brokers, looking at different investment opportunities, but the why is there, and the time, the effort, the headache, the hardship, the frustrating times, it all makes it worth it when you have a vision that you're working towards. So quitting your corporate job, becoming a full-time real estate investor, covering all of your living expenses with cash flow from real estate investments. Those are significantly rewarding goals, and that's going to help get you there. Multifamily was the best asset class that we knew of to meet the goals that we had, having a team, having scale, not having to report to a full-time day job. It's all the reason that we were able to get to where we are as quickly as we have, and multifamily is that asset. So if you are trying to quit your corporate job, if you are trying to build cash flow to cover your cost of living, I would highly encourage you to look at multifamily as the way to do it, because it has the scalability compared to other real estate investments. Once you get to that point of having the freedom being full-time real estate investor, real estate entrepreneur, or just having your cost of living covered by real estate income, now you need to start thinking about how to work when you don't have to. This is really important. As we think about why we want to quit our corporate job or why we want to stop doing these activities and focus on real estate full-time, it's really for that freedom. So having the freedom of your time, being in control of it on a daily basis, very rewarding. However, there's also times where you are going to have to work even though you don't have to. And so the big piece here is doing things that you're passionate about. It's one of the reasons I'm so grateful to have such a phenomenal team at passiveinvesting.com. We have people like Melissa who handle all of our marketing and things that she loves doing, but I am not as passionate about. And I would get burned out if I had to do that on a daily basis. And so having the passion for the activities that you want to do is what allows you to work diligently, work productively, even though you don't have to. So I have big goals on my board back here that I look at every day, and being able to do the things that really fulfill me, knowing that my income from investments is going to support my lifestyle is a freedom of the mind, right? I don't have to worry about getting a paycheck or how my bills are going to be paid. It's all from that passive income that comes in on a monthly basis, and that gives me personally, gives my brain freedom to let go of that worry and be focused on the future ahead, or what I'm doing in front of me, or leaving my phone at home and taking a walk with my wife and our dog George. It's one of those things that allows you to have that freedom of the mind, and I can focus on doing things I'm passionate about. Doing these webinars, being able to talk to you all on a noon Eastern call on a Tuesday is very rewarding for me. I love trying to help people. I want to get all of you started or take you to the next level. And so that to me is fun. I'm passionate about this. And being able to do this gives me energy, makes me feel good, and allows me to do my next set of activities for whatever I'm going to do next. And so it's really a balance of getting to financial freedom, getting that balanced lifestyle where you don't necessarily have to work, but you enjoy what you do so much it doesn't feel like work. Logging on to do this webinar does not feel like work to me whatsoever. And so it is very enjoyable. And it's a ton of passion that I get to put towards this. And by that mentality of feeling good, feeling like I'm helping you all, gives me the energy to go and do more activities, more productivity, as I think about my own personal and business goals on this board back here. And so that's another important piece that multifamily allows you to do. It allows you to scale. It allows you to get that financial freedom. And then it allows you to focus on the things you're passionate about and pay for or hire people to do the things that you don't enjoy as much. That way, you're not feeling like you're working. You're just doing the things that you really enjoy to do, and you're rewarded by the work. So last piece of today's presentation, then I'll get into any Q&A. Any Q&A that you all have, just use that Q&A box so I can keep track of everything. But the last part is a simple exercise that I've learned that you all have probably heard about before, but it is a 4-bucket prioritization timeline. So get a piece of paper and a notepad out and just draw a vertical line and then a horizontal line. So you have 4 quadrants on your piece of paper. And then basically the way I think about it is across the top axis, just write a low and then a high. And so these are low value activities, and high value activities. And then on your Y axis, or your vertical one, write enjoy and dislike or not enjoy on the bottom one. And so when you think about these quadrants, in the top left quadrant, we have things that you enjoy but are low value. And then on the top right, you're going to have high value activity of things you enjoy. And then on the bottom of the quadrant, the bottom right, we're going to have high value activities that you dislike or don't enjoy doing. And then we're going to have low value activities that you don't enjoy doing. Now, when I think about these activities, I really want you to think about, you know, I suppose some personal activities, but mostly business activities, and go through what you do in a given week and put it into each of these quadrants. So, you know, if you're the type of person who loves running the numbers, maybe underwriting a deal goes into the high value, enjoy doing top right quadrant. But if you are not a people person, maybe investor relations or talking to potential investors, that's a high value activity, but maybe you don't like doing it. So put it in that low bucket. And let's say you are, in addition to being the numbers person, you enjoy doing this, you don't enjoy doing that. Maybe from a low value activity, you know, maybe it's like checking the bank account statements. Probably a low value activity. You know, do you enjoy doing it or do you dislike doing it? But put it over in that bucket accordingly. And go through everything you do in a given week, prioritize where it goes into your 4 quadrants. And if you don't like the low and the high value, change it to whatever you want. But really, there's kind of 4 buckets. Things that are high value you enjoy doing, things that are high value that you dislike, things that are low value that you dislike, and things that are of high value that you dislike. There's those 4 buckets. And doing this exercise, if you are a solo entrepreneur, you may have to do all of these activities still. But what it may give you is a goal to scale up and hire someone to do the activities that you dislike. Or maybe as a solo entrepreneur, maybe you're looking to partner with someone. Maybe you need to start to find a person who likes doing what you dislike. So if you're not a marketing and investor relations type person, maybe you need to look for that in your future partner. So it's just a good exercise to kind of level set and have that balanced life. So there's going to be certainly times where you have to do things you dislike or are low value. But the whole objective is to try to stay in that high value, enjoy doing quadrant, and the low value, enjoy doing quadrant, and then outsource the things that you dislike doing. There's still probably activities that have to get done, but it's going to give you focus to remain balanced, and it's going to help you get there. So like I said, it's probably something you've already heard in a book, in a productivity book, in a self-help book, but it's just one more way for me to kind of explain in my words how I personally think about this. I try to do this activity every year, at least maybe every 6 months, just to kind of check in. And I'll look back at my calendar from last week and I'll say, okay, what was everything that I did? Where does it fall into my buckets? How am I personally performing my day-to-day duties? Can I do something to improve? Can I work more efficiently? Can I get help from one of our team members in a better way to feel more balanced, more productive, a little bit more free of having the quote unquote burden of doing things that I don't enjoy doing as much? And so think about that activity. You know, it's just a 4 quadrant exercise. So a vertical line, a horizontal line, high value, enjoy doing, low value, enjoy doing, low value, don't enjoy doing, and then high value activity, but you don't enjoy doing it. So go through that exercise. With that, I'm going to just open everything up for Q&A. So anything that you have around living a balanced life, how to get there, how to get started, how to improve, how to take things to the next level, go ahead and ask that now in the Q&A box. And I'm going to try to address some of these questions. So first one off the bat, where can I find an asset manager and what qualifications would you look for? Well, Jose, I would check with a local networking group. Maybe there's someone that you meet in that group who loves asset management and would be well qualified. The other place that you can look, LinkedIn is a great source to find highly qualified people. You can also submit a Facebook job posting. And one tip that I always do, if I'm ever posting a job application, I would personally make a odd request in the subject of the listing. So, maybe the job posting is like follow up with an email to, jobs@mycompany.com. And the subject line should be something unique, or maybe within the email, attach a picture of you and your family, or send me a copy of your, degree or resume, or write a letter, a couple paragraphs long of why you think you deserve this job. And some odd request, it helps filter out those that probably are not going to put in the effort to long-term stay and work with you. And those that follow this kind of odd request or write a letter of why they want the job are going to take it a lot more seriously. So asset manager qualifications, I would ask about their experience managing the assets that you have. I would ask them how they, what their philosophy is. I would ask how they interact with property management. I would have them review a T12 or a P&L statement and point out areas where they would optimize income or decrease expenses. And I would just go through the basics with that for an asset manager. Let's see. I am new to investing and ready to buy. This will be my first investment. Should I buy in LA area, 2 to 4 units, or do out of state? Well, it really depends on what your goals are. So if you feel like you need to own and operate in your backyard, you should buy there. If you're comfortable owning and operating further away, then buy there. But I would ultimately look for the appropriate investment that meets your goals. So work backwards. Like, what cash flow are you trying to achieve? How many units do you need to purchase to get there? And how quickly can you do that? Do you have any money to get started? Do you need to raise all of the money on your own? Do you have any experience at all with real estate at all, or business where you could even partner with someone? Are you using your own money to buy the deal? In that case, I would say buy something immediately so you can prove the real estate proof of concept as a real estate investor, entrepreneur, and then scale up on your second investment. Can you give me a quick summary of a solo 401k and its benefit with multifamily investing in mind? So a solo 401k is just a retirement vehicle that allows you to either if it is a solo 401k or a solo, I think they have Roth 401s. The 401k allows you to put tax-free money in. You pay taxes on the way out. So that's the benefit. Solo 401k allows you to invest in whatever it is that you want to do. And so I believe with the retirement accounts, you cannot be personally involved in the day-to-day investment. So I would encourage you to speak to a custodian, a solo 401k custodian who can set up that account. Someone here is saying Advanta IRA. If you Google 401k custodians, you'll get a plethora of it, but it's a good way to help avoid taxes, or minimize, not avoid, minimize taxes for either the future when you withdraw the money, or you pay taxes now and you have tax-free money in the future if you have that Roth set up. What do I need to do or have to stand out and learn from someone on the job? I feel like the only way to close my first deal is to get the experience from someone else using their credibility. Nico, what I would do is network with a local real estate investor group and find someone to partner with. There's typically ways, if you have some money, you could invest kind of passively, but learn the process for the type of real estate that you want to invest in. Alternatively, maybe there's a way you can physically do the work and kind of trade that sweat equity to learn. But what you're going to need to do is kind of find a partner who's in the similar stage as you. For example, a person who owns 2,000 apartment homes probably doesn't need to have you on their team. You could certainly ask, but usually people who are way more experienced have a full-time team already. And so I would encourage you to network with a lot of local real estate investors and find someone that you either aspire to be and see if you can help them, or find someone to partner with and just get started. How are investment opportunities for Cleveland, Ohio? I have no idea. We don't invest in Cleveland, Ohio. I would call local property managers and local brokers there to get started. As a beginner, would you avoid a C-class neighborhood? It depends on the type of investment goals that you have. Typically, C-class areas are a little bit more challenging, just in terms of tenant turnover, property type, property maintenance. So I would say you're going to learn a ton. And if you are able to get started, I would do that. I would just have some experience of either a mentor or a very experienced property management company to help you navigate that C-class neighborhood. Where can I start getting deals to practice my underwriting? Absolutely, Andres. You can just call brokers, send deals. You can look online. You can underwrite deals off of LoopNet. You can sign up for all of the broker lists, and they'll send you new deals that are coming available. Would you pay this asset manager as a W-2 and make sure portfolio sustains the cost? Would you share? I would start them out as a W-2 employee and pay them that way, because you need to make sure that it's a good fit for them. And so the portfolio, it depends where you're at. If you are still in the process of scaling, you personally, as the owner, may come out of pocket to pay this person, but that's okay if you are planning to grow more, and you're going to have more properties being able to support that W-2 income. So I would try that to start. I would like to invest in multifamily for assisted living. How do I find an apartment building for this and convert it to assisted living? I have no idea. We have never done assisted living. We're just traditional multifamily. So I would kind of Google around, and I would also find a podcast that is assisted living conversions. That may be a good Google search, and you should find someone who knows more about assisted living. Looking to buy a second property after 15 years of owning and self-managing a 3-family, about $500,000 in equity. Do you prefer a HELOC or a cash out? What should I look out for when shopping lenders? Well, I would, Paul, check out your particular goals. So, I mean, typically with a HELOC, you're not going to access as much equity or cash. And so if you want to buy a more expensive property, you may need to cash out, right? Maybe you're going to sell the 3-family and buy a 20 unit. Versus if you go with a HELOC, maybe you can only afford to buy another 3-family. So I would check out your goals and weigh those options. I mean, lenders right now for investment property are very competitive in the space. And I don't think there's much to look out for. I would just personally shop 5 to 10 lenders and make sure that their quotes are comparable and you go with the best one that ultimately aligns with your personal goal. So cash out versus HELOC, it should be a formula of how much cash you need, what is the next property that you want to buy, and that should get you closer to the answer. Could you advise on ways to gain investor credibility when starting out? Michael, you need to build your real estate investor resume. When I first got started, I was known as Danny, the financial consultant. And so I had to change people's reference to me to be Danny, the real estate investor. And so having a resume around real estate investing is really important. The best way to do it is by having actual properties that you invest in and ideally oversee. So if you don't have any properties at all, I would start investing right away. That way you can say, hey, so-and-so investor, I'm in this deal over here. I've got another rental over here, and I'm looking to move into this next deal. Are you interested in real estate at all? And typically the answer is always yes. Tell me more. How do I get involved? So build your real estate investor resume and start to share that with people, as opposed to Michael, I do this corporate job, or Michael, I'm an entrepreneur. It's got to be Michael, the real estate guy. Is it easier to house hack FHA or use owner financing for my first? Nelson, tough answer. I would probably say FHA, just go buy your own property. It may take longer to find someone to seller finance for you. We use $100 profit per unit as conservative estimate on per unit monthly basis where we put all our money. What do you use as a per month per unit amount on average, and how much of that as a syndicator do you keep? For large scale multifamily properties, it does not work on a per unit basis. What we do is, when we analyze a deal, we determine how much income is going to be generated over the life of the investment and what our projected return would be for our investors. And if a deal meets that return criteria, we will go after trying to acquire that deal. If it does not meet our our hold period returns for investors, we will not go after that deal. And when you're in the multifamily space, there are months when things go perfect to business plan. There's months when things don't go to business plan, and there's months where things go better than the business plan. And so the whole goal is to manage to your budget, to your business plan, so you can hit your investor returns at the end of the day. Do you have a cash flow calculator that you use and can share with us? I'm not sure what you mean by cash flow calculator. I know we have shared an underwriting spreadsheet before for multifamily. I also have a personal income and expense calculator at DannyRandazzo.com. If you want to go there, you can download that income and expense calculator, or within the MFIN Facebook group, we do have the underwriting spreadsheet. Do you recommend converting a house into assisted living? Depends on how many units you can create. I know people who have had success in that space. We don't really do it. I would just encourage you to listen to a podcast on converting a house to assisted living and maybe get some more answers that way. Any opportunities in Charlotte? We are actively looking for deals. We're hoping to get something under contract here in 60 days or so. So very excited for that Charlotte, North Carolina market. Left the W-2 world, started solo 401k, process of formulating a business as a real estate investor. Any thoughts on how to best structure the business in terms of being portfolio manager, rentals, syndicators? Ron, I would say check out some podcasts about people who quit their W-2 jobs and became full-time real estate investors. It sounds like you're just at the very early stages. And so I would just figure out what you want to do, what roles you're good at. Again, go through the quadrant exercise, see what you like doing, and that may help you figure out what you're passionate about, what you're good at, and then, partner with some people to help get you to that next level. Multifamily is a team sport. It takes a ton of us. Just check out our company at passiveinvesting.com. It's not just one person doing everything. So if you want to scale and grow, think about the whole business unit. I want to net 5K a month with multifamily based on the averages from the area. Approximately how much capital is needed? Well, Gregory, depends on where you are going to buy a multifamily property. I would say, I would say certainly you should be able to cash flow. If you buy, you should be able to cash flow $5,000 a month. I'm guessing numbers off the top of my head, so don't quote me because I have no idea about your area. But if you bought like a $1 to $2 million property, depending on the debt structure and the investment structure, a $1 to $2 million property should allow you to cash flow 5K a month. And so buying a $1 to $2 million property, typically you need somewhere around, call it 25%, depending again on your debt structure. You're going to need somewhere between $250,000 and $500,000 to go and buy those properties. Alternatively, if you wanted to invest in passive investments and make $5,000 a month, let's see here. I'm just doing some quick math here. 750. If you passively invested in cash flowing multifamily syndications, you'd probably need about $500,000 to $750,000 to get that same $5,000 a month. So think about your area and specifically what you have and how much you want to get. Assume the Raleigh area for that 5,000. So again, my answer is pretty close. You would need to buy about $1 million to $2 million property to cash flow 5K a month, or you could invest in passive syndications and probably invest $500,000 to $750,000, and hopefully your monthly cash flow would be that 5K roughly. How do you choose your market while trying to invest out of state? Well, you figure out what your goal is and what markets are going to work for that goal. So if you are looking for, steady cash flow, a stable investment, maybe you want to look for areas where population and job growth is occurring and things should remain stable. So you really need to think about your goal first and then find a market. And I would network with brokers, property managers, other investors to see what is going on in that market. And then I would choose to invest there. So with that, we are pretty much done. I'm going to check this chat box and see if I missed anything. And we'll answer, what do you do for stress relief? I would say work out, read a book, take a walk, do something where you can leave all technology behind and kind of get away. Let me see here. Any literature or websites learning more about multifamily investing, check out the MFIN Facebook group and page. All of the content is there. I'm looking to purchase 2 multi-listing properties, taking a loan from my 401k. I think that's a great way to get started investing, by taking a loan from your 401k. Put that money to work in things you can control, like real estate, as opposed to the stock market, which you're just at the mercy of Wall Street. How does one transition from being a passive to more active? Can a passive experience? Yeah, absolutely. Passive experience can be leveraged to leave your full-time job. So it's a great way to get started by passively investing, so you can learn how investments work. You can build your resume, that real estate resume that says, hey, I'm a passive investor in this 100-unit apartment community. I've learned the ins and outs of how this group does it. And, I've done 2 or 3 more of these. And now I'm going to go out and do it on my own because I know how things work, how to manage the asset. And so absolutely build that resume passively. And then you can leverage that towards leaving your W-2 job, because the other thing it'll help with is you'll have that passive cash flow coming in, which helps with the transition. And I believe I kind of answered that question already. So perfect. We are all answered. I appreciate everyone for being here today to kind of cover living a balanced life with multifamily. Again, we went through the powerful scale that multifamily has. We went through how to kind of work when you don't have to, and then the 4 buckets of prioritization to really focus on what you're passionate about doing, and it gives you that energy to continue doing what you love. So with that, I am signing off, Multifamily Investor Nation. Thank you for joining us this afternoon, this morning, this evening, from wherever you are calling in from. And we will catch you next week. Have a great day and get your activities done that you were thinking about what you wanted to do this week. So we'll catch you later, and thank you very much.